What's a VA loan? I have no clue. Let's go ask my husband. Hey, honey. What's a VA loan?
VA loan.
Your daddy was home when you left. Your mama was home when you left. Your sister was home when you left. Your brother was home when you left. The dog was home when you left. The cat was home when you left. The fish was home when you left. Your daddy, your mama, your brother, your sister, the dog, the cat, the fish was home when you left. And that's the reason you left. I left my home. I left my home. Join the army. Join the army.
Hello veterans and service members. I'd first like to start off by saying thank you for your service. As a veteran myself, I know the sacrifices that you made and the sacrifices that you're still being made by our current service members, and fully believe that you deserve every benefit that's offered, plus more. Today, in an effort to help my fellow soldiers, I'll be exploring VA loans, an incredible benefit for those who served. We'll cover what VA loans are, who's eligible, key benefits, and how to apply. Let's get started. So starting to our first question, what is a VA loan? A VA loan is a mortgage backed by the U.S. Department of Veterans Affairs. It is designed for veterans, active duty service members, and eligible surviving spouses. It offers favorable terms like no down payments and also no private mortgage insurance. Simply said, it makes homeownership more affordable. Now to qualify, you need the certificate of eligibility from the VA. Those who are eligible include the following. First, active duty service members with at least 90 days of service. Second, veterans with 90 days of wartime service or 181 days during peacetime or 24 months for post-1980 service. Third, National Guard or reservist members with 6 years of service or 90 days of active duty as well. And fourth, surviving spouses of service members who died in the line of duty or from service-related causes, provided they haven't remarried, with some exceptions that do apply. You'll also need a stable income, a debt-to-income ratio typically under 41%, and enough residual income for living expenses. Most lenders require a credit score of a 620 or higher, but the VA's flexible guidelines can help those with lower scores. Next, let's talk about the key benefits. With regard to VA loans, they shine with these 6 advantages. First, no down payment. So you can buy a home without upfront cash as long as the price matches the appraised value. Second, no private mortgage insurance, which lowers your monthly payments. Third, competitive interest rates, which are often lower than conventional loans. And fourth, flexible credit requirements, making approval easier even with past financial hiccups. Number 5 as well, assumable loans, allowing buyers to take over your loan's lower rate, which is a big plus, especially with the problems we have with interest rates currently. With them being so high, of course, I'm saying. And then 6th and final, caps on certain fees related to closing costs, and VA support to avoid foreclosure. Let's take a moment to compare the VA loan's advantages to a conventional loan through looking at this example. Alright, let's look at the example when comparing a VA loan versus a conventional loan. Now, we're looking at this brand new home. The home is valued at about $500,000. The person who's going to purchase the home has a credit score of about 650. Now, first we're going to take a peek at the conventional loan, for the conventional side of this picture. Typically, in most cases today, most will put down about a 10% down payment, not exactly a 20% down payment. And a 10% down payment on $500,000 would be about $50,000. Okay, which would mean that would leave the mortgage value remaining that they'd be pulling off for a loan of $450,000. Now, because they only put a 10% down payment and not 20% down payment, they're going to have to be paying a monthly PMI. That PMI, in order to figure that out, we would take the $450,000 remaining amount they'll be pulling for the mortgage, multiply that by half a percentage point, which is 0.005, and that would equal about $2,250. We take that number, we multiply that by 12 because there are 12 months in a year, and we end up at $187.50. Now, keep in mind this 0.005 I'm talking about, in other words, is half a percentage point. This is what I'm averaging right now, based on the credit score of a 650. Okay, most typical PMIs, they can range anywhere from pretty much 0.3 of a percentage point all the way up to 1.5%. So in this example here, I'm thinking about half a percentage point will likely do in this example. Now, beyond that, and again, here it is, half percentage point we're looking at. Anyways, though, Beyond that, though, the 6.93% is right now the standard average at a 650 credit score for a conventional loan. So, and when we do our brokering math, I'm not going to get into the heavy details of the math because it is pretty intense. But when we do our math, we end up somewhere around an average of $2,971.76 for a monthly payment, which is, in other words, your principal and your interest. Now, we also have to include the 187.50 into that, and that comes out to a total of $3,159.26. Okay? Now, when comparing that to a VA loan, if we take a close look, now we remember from what we learned previously that a VA loan has no down payments at all. Okay? So that means your entire mortgage would be at $500,000. And I'll be honest, this is an amazing thing for those who are getting a VA loan, because they can use that $50,000 for other things of greater benefit, like doing repairs on the house, or maybe even adding like a pool, whatever they want to do. Or they could just put in their savings and use it to save as an egg, just in case if anything was to ever happen, rainy day type situations. No matter the case, though, they also are not required to get PMI as well, so they don't have to worry about even paying the money for PMI. And funny be it, even at a 650 credit score, their interest rate is very competitive when it comes to conventional loans. So a 6.80% is what we're getting here on average right now for a VA at a 650 credit score, which is actually below what the 6.93 is on a conventional loan. This here puts them at a monthly payment, when doing the brokering math, at about $3,300.67 for a monthly payment. That includes your principal and your interest here that we're talking about. So in the end, they're paying about $3,300.67, where on the conventional side, they're paying $3,159.26. Now that there is a difference of about $171.41. So you're paying a little more on the VA side than you are on the conventional side, but that's because you didn't put the $50,000 down payment down in the beginning. If you wanted to do that, you'd even pay less, most likely. However, though, just think about that for a moment. They didn't put a $50,000 down payment down, and they're only paying $171.41 more. That's actually really good. So there's a clear benefit in having a VA loan as comparable to a conventional loan. Now, we did not include the closing costs, which include additional fees and stuff like that. And when we include those there, that could change things a little bit, but not significantly. But keep in mind, too, that the VA loan kind of it holds back on certain fees. It doesn't allow certain fees to occur, where the conventional loan actually allows certain fees. So that there helps with even more savings on the VA loan side of it too. So even though these numbers may rise a little bit due to closing costs for the monthly principal and interest payments they're paying, and for the conventional side, which also include the PMI payment too, the amounts may rise a little bit. They may not rise by much, and we may find too the conventional loan maybe rises a little bit more to the VA loan due to the additional fees at the very end for closing costs. No matter the case, though, these are clear differences between the VA loan and the conventional loan, and you can definitely see the benefits of the VA loan in this example, even though you're paying a little bit more, which really isn't a significant difference more. It really isn't, and it's more beneficial to the actual borrower. It really is. So that's all I have to say for giving you guys and showing you guys the prime example of how a VA loan is compared to a conventional loan. Now, there are a few considerations that should be taken into account when thinking of getting a VA loan. The first is the funding fee. Typically, it's a 0.5% to as high as 3.3% of the loan, but it can be rolled into the loan or even waived for disabled veterans, like was done in our previous VA loan example. Number two, the home must be your primary residence. No vacation homes or rentals, in other words, that means. Number three, the VA appraisal ensures the home is safe and sound, but may delay the closing or require repairs. Now, the next thing I want to get into here is the application process. The first step in the application process, of course, is to obtain the certificate of eligibility through the VA's e-benefits portal. Second is to choose an experienced VA lender and get pre-approved to know your actual budget. Third is to find a home that meets the VA's minimum property requirements, like safe wiring and roofing. And fourth, have the lender order a VA appraisal to confirm the home's value and condition. Fifth, which is our last one here, is to close the loan, pay any funding fee, of course, and move in within 60 days, or later if you're on active duty, because that can occur. Now, there's some extra tips I would like to go ahead and provide as well. And first extra tip I want to provide is that you can use VA loans multiple times if you have enough entitlement. The second point I want to make here is that the full entitlement means no loan limits in 2025, but partial entitlement may cap your loan amount. So in other words, you may ask yourself right now, or you may even be asking me, well, what's an entitlement? The simple answer is, it's the amount of loan that the VA will guarantee for a VA home loan. The larger the entitlement can mean a higher guaranteed loan amount that can also help with potentially allowing for a zero down payment and better interest rates. So the third key thing I want to mention here too for tips is that you can add up to $6,000 for energy efficient upgrades like solar panels. And the fourth key point I want to make here is that condos are eligible, but they must be in VA approved projects. Now, for more details, you can visit va.gov. VA loans are a powerful tool to achieve homeownership with less financial strain. Contact a VA approved lender like myself to start your journey. Lastly, if you like my content, please take a moment to like and subscribe and share it with others. And again, thank you for your service.
Like and subscribe.